Hey guys, Hector Davil here. In this video I'm gonna talk about obviously price action reading, but more specifically about multi-time frame trading, right? How to read price action in the longer time frames and how to apply that, or how to integrate that price action reading analysis in the longer time frames with your perhaps intraday trading systems, all right, or with your intraday trading routine. Okay, it's a technique that I've been using for years, and I want to pass it on to you because it's, in my experience, is the best way in order to maximize win-loss ratios on your intraday trading systems. All right. Again, this works regardless of whether you are using the London Open breakout strategy, the market flow strategy, or any other intraday trading strategy you may prefer. Okay, so as usual, the first steps would apply just as we've seen all throughout this price action reading module. That means that first of all, you need to analyze and draw levels of support and resistance in the long-term charts. As usual, that's always the first step. Okay, spot those hot areas, hot levels in the daily, weekly, and even monthly time frames. Okay, now step number 2, as usual, would be to simply wait for price reaction of those specific levels of support and resistance, right? What I personally do myself is to simply set price alerts, all right, price alert messages, which nowadays any charting platform you may use, such as for example MetaTrader, TradeStation, MetaStock, it doesn't matter. Every single current charting platform allow you to set price alerts around any specific level you may wish, right? So for example, if you have a level of support and resistance right there, let's assume it's the euro against the American dollar at 130.00. All right, you can set the price alert at, let's say, 129.50. All right. Let's say 50 pips below that specific price, and obviously 50 pips above that specific price as well, depending on whether current market price is above or below that level of support and resistance, and simply let your platform alert you whenever price is reaching that specific level. Okay, that way you don't have to monitor your charts 24/7. All right, you can configure most charting platforms to send you either an SMS alert to your mobile phone, or perhaps an email alert, or simply a sound alert if you simply leave your charting platform running 24/7. Okay, at any rate, get your charting platform to alert you whenever price is reaching those key levels of support and resistance, and then monitor price action real quickly, waiting for those price reactions. Okay. Anyway, as price reaches those levels of support and resistance, there are two possible reactions you can get from that level: either a bounce or a breakout. Okay, let's assume that previously price has reached a swing high and therefore giving us a level of resistance. Well, if price comes back up to retest that level, like I said before, you can either get the breakout or the bounce, right? There are no two other there is no other possible outcome from this scenario unless price simply decides to meander sideways around that specific level, and therefore that's a reaction you obviously don't want to trade, precisely because you are getting no sharp reaction whatsoever, right? So remember, only two situations where you want to trade off a level of support and resistance: either a sharp bounce or a sharp breakout. Now, out of those two possible situations, I usually favor bounces over breakouts. In my experience, trading opportunities generated off a bounce or from a bounce are usually more consistent, or generate profits more consistently than those generated from initial breakouts. Again, because if you are trading the breakout, you would be effectively trading the initial breakout, and as you've probably seen from previous videos, I usually advise trading the initial breakout. Okay, at the very most, what I like to do is to wait for the breakout swing to die out and then wait for the pullback, for the first swing pullback, and from there start searching for reactions in the direction of the original breakout, right? Basically, I'm talking about the concept of former resistance now working as support, and as that level indeed confirms and as support, and as price begins to curl up in the direction of the original breakout, there's where you want to search for your trading opportunities. Okay, not in the original breakout, guys, because you could be, well, basically you could be facing a very likely fake breakout, which, as we've seen already multiple times through these tutorial videos, fake breakouts do occur, and they do occur often. All right, so what I'm getting down to is that if you want to play it more or less conservative in order to, well, maximize your win-loss ratio as much as possible, you want to wait or trade for bounces and perhaps pass on breakout reactions, right? That depends on how aggressive you are in your trading. Okay, so assuming you do indeed go only for bounce reactions and pass on initial breakout reactions altogether, there are two possible bounces you can get. Okay, either an initial bounce of a level of resistance or support, depending on whether what direction price is coming onto the level of support and resistance. Anyway, let's assume it's indeed resistance. So you can trade the initial bounce to the downside, okay, and therefore search for short opportunities right there. Or if you do get the breakout, like I said before, pass on the initial breakout, let the first breakout swing die out, as usually it gives way to a swing pullback to retest that level, and if from there you get the bounce, that's where you would be searching for long opportunities right there as price begins to react off that level, this time around to the upside. Again, former support resistance now converted or now working as support. Okay, so short opportunities upon the initial bounce or long opportunities upon the beginning of the continuation upon this breakout pullback continuation pattern. Okay, guys, over the long run, it does pay off to play it conservative. It does pay off to be conservative in your trading, and these are the two most conservative, but at the same time the two safest scenarios you want to trade as far as trading price reactions of levels of support and resistance. Anyway, so as you're beginning to get the bounce of that level, then zoom into your preferred short-term chart. All right, that short-term chart, maybe the hourly time frame, maybe the 15 minutes time frame, maybe the 4 hours time frame, depending on what your intraday trading system dictates, right? But at any rate, zoom into your preferred short-term charts and then filter the trading signals coming from your system, okay, and make sure to trade only in the direction of the bounce. Okay, so if you are getting the initial bounce of that level of support and resistance, then trigger only short trades, right, and pass altogether on any long opportunity your trading system may signal. And in the other hand, if you get the breakout pullback and from there you get another bounce, then trade or take only long opportunities, passing on any possible short opportunity your system may get. Again, you want to make sure that you only trade in the direction of the bounce. Now, finally, please remember that you may get multiple intraday trades in the upcoming intraday sessions, right? It's not just a one-off trading opportunity that you basically trade that first signal you get from the bounce. In fact, you might get multiple trading opportunities always in the direction of the bounce, but you may actually get multiple trades in that direction over the upcoming trading sessions. At the end of the day, if you get a bounce on the, let's imagine that this level of support and resistance belongs to the weekly time frame, right? Well, chances are that the weekly time frame will give you a long red candle up on the bounce, right, at the end of the week. Well, that means that throughout the entire week, the bias, the market bias, is going to be to the downside. And therefore, that means that you may get maybe, I don't know, 2, 3, even 4 trading opportunities throughout that week. You know that throughout the entire week, you are to search only for short opportunities, and not just the first one, the first opportunity you may get on the first day, all right, from here, let's say, to here, but hey, why not searching for more short opportunities throughout the entire week? From there, perhaps down there, okay? Remember that this bearish candle in the weekly time frame, maybe, I don't know, let's say 200 pips, 300 pip long, right? And you can certainly squeeze multiple intraday trades within those 200, 300 pip move to the downside on the weekly chart, okay? And obviously, the opposite holds true if what you are getting is a breakout pullback continuation pattern, right? You may get a buy opportunity somewhere from there to there, and then maybe 1 or 2 days later, you may get another buy opportunity from there to there, etc., etc. These individual trades may be, I don't know, 40, 50 pips, you know, typical intraday trades. But if we look into the longer, into the overall scheme of things, if we look into this move from a weekly perspective, since at the end of the day, this is a weekly reaction, right? This move can easily be 200 or 300 pips. So again, why not taking multiple intraday trades within this weekly move? Okay, so I repeat, don't just take the first trade, the first trading opportunity on that bounce, all right, and then search somewhere else in some other chart for your next trading opportunity. That would be a waste. Instead, continue monitoring this specific scenario, this specific currency pair for the upcoming week, even for the next 2 weeks, because indeed you may get one trading opportunity today, then another one tomorrow, then perhaps another one 3 days later, and so on and so forth. Remember, this is going to be a long-term move, so why not squeezing quite a few intraday profits over the following or over the upcoming trading sessions? All right? Anyway, guys, that's pretty much all for this video. This is by far one of my favorite intraday trading tips or tricks, okay, trying to blend long-term levels of support and resistance in order to dictate the direction of my intraday trading. All right, over the years is, again, by far the very best way I've found to keep up with a, with a sustainable, with a rather positive win-loss ratio over time. And I would certainly advise you guys to start using this technique yourselves. All right? Okay, folks, that's all for this video. Cheers. Bye-bye.